Technical video for the Quasidb service for the week beginning 24th of August 2020. If you see the risk calculation on the spreadsheet, you'd see that we were slightly risk on today than we were compared to on Friday. Because of that, we are seeing the risk on, as per the spreadsheet. So the DAX on the daily is actually breaking the shift channel top resistance at 12852. And that's calculated because of this. This is as your swing low, and then there's the COVID low. So it's created an angle, and there we go. That's actually created projected a resistance, and you see how it hovered on that line for a while, and then we're getting a breakout today. So we zoom in. There we go. There's the daily candle off the shift channel top. So that's calculated from that low. So quite bullish above. And I can't see any reason why we wouldn't test this now at 14092. Assuming that we're going to be risk on again tomorrow, it'll just it'll punish the bears and it'll keep going up. Because when the bears come in, where do they have their stops? They've got their stops above. What do market makers want to do? They want to take their stops. And anyway, you could probably argue this is going to go up anyway, technically, because we've broken that line. So there's your levels. You can always pause the video if you wanted to, and then that would be a good support now. And there's your resistance there, 13827. So that's the DAX. Now the Dow Jones is doing the same. There's your swing low, November, and there's your COVID low, and there's your angle. There's your swing high in February, and see how we got resistance now. Testing it right now. So I think it's going to break this ABCD, and it's going to overcome this shift channel, and it's going to do what the DAX is doing. So you wouldn't necessarily want to be bearish this because the risk is on sentimentally. So the bearish ABCD will break if we crack above 28476, and then we'll have a new harmonic. I don't know what it will be yet. It will then decide once that's broken. So that's the Dow Jones. Now the daily FTSE is formatted strangely, so I won't show you that. I'll just show you the hourly, and the level of interest for me, if I were trading this, would be this B, which is the body. So you've got X, and then you've got A, B, C, D. D is the sell. Okay, so that's the bias, is at that point, it's a sell. But B is your body, so that's the key at 6112. And we are at 6107. So we're quite close to that resistance. And we're also getting close to this median line, this halfway point between that zigzag, using the angle. So there's 6109, so 50%. So if it cracks above, we go to 6148. And it falls below, we've got 6070. Pound USD, so we got resistance at 38.2 at 13128. There's your support at 13093. And some resistance at 13161, and lots of dollar weakness as well. You would have seen my Dixie chart, and because the dollar is softening, it's actually creating like a snowball effect on lots of other pairs. Like the pound CAD rallied because of this, so it is very frustrating at the moment. So keep an eye on the Dixie if you can. It's obviously correlating negatively to stocks as well. So if stocks are going to go up, then dollar's going to fall. So it's worth keeping an eye on the risk for that. So this will probably rally if we continue to rally on indices. So level of interest is 13128. Euro pound 61.8 support at 90.18, resistance at 90.29, and you've got some support here at 89.86. Just zoom out, and there's your diagonal break, which is the dragon, and then you had that huge response on the break there. That was actually coincided with a sentiment shift as well. So yeah, just surged after that break. So yeah, got like some kind of interesting correlation there from that break. So we had that low, and we hit that low. I don't know if you can see that, but there's 3 contact points there. So level of interest there is 9. Yeah, it's basically on the round number, just a couple of pips above, 5 pips or so above the round number. So yeah, it's a tricky one, but there's your levelers anyway. We are actually bearish on the Euro USD, but sentimentally it's a buy, as you probably were aware. We've got a bearish ABCD, and we break if we go above 12027. So yeah, the DIX is the bearish ABCD, and the Euro USD is also bearish ABCD, both on the daily. So it's going to be a big battle for the euro and the dollar this week, technically, because they're both bearish on the daily. So it's going to be quite tricky. Sentimentally, this should prevail, and the dollar's going to like puke. But if stocks fall, it's going to affect things. So a bit of a tricky one. But I'll just go on to do gold now, and then I'll do the yen pairs. So this is the gold on the daily. There's your warning sign at 43.6 at 2065. It shouldn't have ever exceeded that. That's just ridiculous. And 261.8. I can't quite read that. At 1858. Change the time frame. It's an hour. So on the hourly, we're bearish. We've got a descending channel, and we've broken pitchforks at 1919, and in the resistance it's 1969. Quick one about the yen pairs, and I'll try and make this a shorter than 10 minutes. So we've got the dollar yen. So we got this on the daily. How are we looking? 23.6 resistance there. 61.8 resistance there. There's your support. It's kind of came into play there. I thought that might have held, and it did, so that was quite good. Change the time frame. Just do hourly. So yeah, descending channel. Your levels of interest is 105.73, 105.95, 105.49. It breaks 105.49, we'll go to 105.04, and then potentially we might even see a diagonal break as well. So Aussie yen 76.09, 75.64. Bearish 3 drives, 1, 2, 3. Send in. We had quite an interesting rejection of that shift channel low there. So keep an eye on 76.27. That should be quite a good resistance there. And a lot of these pairs are rallying because the dollar counterparts are doing well, because there's a strong correlation between AJ and AU, and obviously pound yen and pound USD. So we've got resistance at 138.80. There's that line. Zoom back in. Support 138.51. Resistance 139.06. There's that resistance line. So this is tricky because the dollar is fallen heavily, so it's skewing a lot of these pairs. Euro yen 61.8. It's 125.13, 125.42, 125.71. So that's going to be quite a key support, 61.8. Bearish below that shift channel though. At that point, it would have been a good sell. So yeah, it's all dependent on the dollar. Everything relies on that. CAD yen, strong diagonal, 79.88, 80.34, 80.44. So assuming we break below, it could fall, but don't forget it did fall already, and it just rallied anyway. You had your horizontal supports there, you see, almost dead on, quite freaky. So I guess there's probably lots of orders to sell from the retail, and it went, oh no, we're not going to fall because obviously there's too much liquidity, and it went up to grab their stops. So yeah, bearish because we've broken that pitchfork, but we're bullish because we're above that diagonal, and also bullish because we broke the diagonal before, but we're above the horizontal. So perhaps if it breaks 79.88 again, then it'll become quite bearish. Yeah, so that's it. Just a 10-minute video. I will wrap up now, and don't forget I'm moving home, so I'm away in the afternoon, and I will be away most afternoons this week. So just bear that in mind. And if you want any pairs done, just let me know. And I hope you have a good day.